Let's get back to the leads for our market. We mentioned some of the mixed picture from equities. Across the commodities, we mostly saw things higher. Base metal prices broadly gaining. Copper was really a standout, though, and one worth mentioning, rallying at one point to its priciest in a week, above 9,000 a tonne. Larry Shover is from Efficient Capital Management, joins us from the NYMEX in New York. Larry, the copper price moves has been one of the things that you've been quite bullish about for some time, but what's prompting the buying lately?
Well, you know, the thing is, we have to keep in mind that copper has lost 10% in the last 2 weeks, but it's still $4 a pound. That means something. That means that, keep in mind also, before I get into the further point, that Shanghai stocks have risen in 5 weeks in a row. That tells you that people are buying copper. It's on a hand-to-mouth basis right now, but producers are buying copper, selling it to consumers. We are in a slowdown, no doubt about it, but $4 a pound is still not that bad.
You make the link in some notes between the outlook for copper and the outlook for the appreciation of the yuan. Tell us why you think that is so important to the outlook.
Yeah, it's actually really important because they're finally letting the currency float. And as you know, last week it rallied about almost 1%, 3% on the year. That's actually a bullish thing for copper because at some point, U.S. copper especially will become more attractive to the Chinese and they'll import more, raising the world reserve price of copper. On the other hand, you think of the manufacturing sector, especially when it comes to a labor-intensive base metal like aluminum, whereas there's going to come a point in time, if the RMB continues to appreciate the way it probably should, that they'll start to look elsewhere to buy their aluminum, most likely in America, where the U.S. dollar will be much cheaper in comparison to the RMB.
Which suggests the pace of appreciation is also important when we have the discussion. What is the current expectations about how much it could rise?
Well, you know, it's funny because if you look at the forward market right now, that's indicating that the RMB may only rise between 1% and 2% per year. But given that the RMB has appreciated by 3%, I'm not sure who's right or who's wrong. Generally, the markets are never wrong. And the fact of the matter is the forwards are pricing in about a 1.5% to 2% appreciation year on year.
I mean, China has let the yuan appreciate a little bit, but it has been reluctant. We all know that. Why would they let it appreciate now faster from what they've already done? Why now?
Yeah, you know, I think to be honest about it, I think they've painted themselves into the corner. I mean, think about it this way. 1/3 of their reserves is tied up in treasury payments from the U.S. 10-year note. That's a scary situation. The political tide has shifted in China where they said, hey, enough is enough. We have too much exposure to these countries, America and Europe, who are just printing money. We need to do what we didn't want to do all along, and that's let our currency float highwards, if you'd say.
And so do you feel that there has been, I mean, because people talked about when we saw the US downgrade from S&P and you saw that debt debacle, people discussed whether China would dump its treasuries. I mean, it obviously wasn't going to do that. It didn't. But you say there's been a more subtle shift, but there has been a shift.
Absolutely. I think the downgrade by S&P was just what broke the camel's back, if you will. I mean, the Chinese have been saying this all along, that they've been very unhappy with our fiscal austerity. We need to change the way we do business in Washington. This was just the straw that broke the camel's back, where we have no choice right now. We have to stop buying debt from countries that are printing money and just let our currency appreciate for better or for worse, because that's the only option we have right now.
Okay, so to take it back to commodities, tell us why then that sets up for you quite a bullish case for, well, for base metals generally.
Yeah, I'm very bullish generally speaking, especially with copper prices, especially when you think what's happened in the last 2 weeks with the whole entire global market. I mean, the fact of the matter is copper did lose 10%, but look where it was. It was at $4.35 a pound. Nobody was really buying copper at that price. At this point, at $4, we're seeing bonded warehouses losing their inventory. We're seeing Shanghai premiums starting to increase, and in fact, they've increased 5 weeks in a row. That tells me that's intuitive that our economy needs copper at about $4 a pound. It's a good buy. The Chinese will not rush to buy the copper, but they're figuring that the economy needs that, and they'll start buying at this price. So it's actually a very good thing long term.
All right, fantastic. So bullish copper. Now, you've been a gold bull. Basically, you've said to us for some time, so long as there's cheap money, gold probably heads higher. But just now, you are suggesting caution.
I'm actually very cautious about gold. I mean, some people are talking about $2,500 an ounce, which would compare to the 1980 high of $850 an ounce. But the fact is, you can't look at that. You have to say markets do not continually go into a straight line. There has to be correction. I mean, that's not to say that gold cannot continue to rally, especially if the sovereign debt issue gets bigger and bigger. But the fact of the matter is, we've come a long way. And the fact of the matter is, we're at $1,800 an ounce. There's a good time for a correction. We see $1,600 and $1,650 as a good place to get back into gold.
Fantastic. Thank you so much, Larry Schober, for giving us your views on that one. Appreciate that. From Efficient Capital Management, from the NYMEX today in New York.